What's going on, guys? Today I'm gonna have another short little video. I'm gonna be going over order blocks, what an order block is and how I use order blocks. If you want to learn more, because I know this video isn't going to be enough to really understand, you're going to need to practice order blocks. And if you want to go to the person who is a way better teacher at it than I am, go to ICT. I'll put the link to his YouTube channel. Matter of fact, I'll just show you guys right now. Just look up ICT, and it will be the first one. Put this back on. Okay, but let's get into the video. I'm gonna start off on US 30. Okay, so the first thing you want to do, the higher the order block, the better. The higher the time frame is on, the more chances that it's going to be respected. And if you don't know what an order block is, say for example, price is trending upwards. Price is trending upwards, making new highs, lower lows, higher highs, and it goes. And then say up here, we start to break market structure. So right here, we broke market structure because we were in an uptrend, and now we are now breaking lows, and we're most likely going to create higher lows to keep going down. So basically where your order block would be, it would be the last down candle before the move down. So right here, so it would be the candle here. Here, let me show you an example. Let me take this off. So right here, let's say this up move. So this is the range we're looking at right in here. Price came down, it was in a downtrend, and then right here we had to break a market structure. We started trading above. So your order block, you would look for the last down candle before this up move, and that would be here. So you would label this as a 4-hour bullish order block. You could do green. I learned order blocks using green and red because it's just easier to learn off of that. So this would be a 4-hour order block. And then from here, how I would trade, I would pull a fib from highs and lows, and you see they match up. So it's basically double confluence, but it's not always on that time frame. So see, remember here, this is a 4-hour order block. So if you come down, it also has smaller order blocks, so you can refine it. So this would be an hour order block. If you go to 4-hour, it's basically, see how it's right here is a 4-hour. They're still kind of in that same general area. And if you go to the lower time frame, you'll have another, it'll still be an order block, just all in those areas. And let me take you to somewhere else. Let's go all the way back here, and I'm gonna see if I can get a live example of an order block working. Let's go to the hour time frame. Let's say right here. We'll go right here. We'll try to use the strategy knowing what we're talking about. So price is in a downtrend, and now it's right here. It looks like it's starting to go upwards. So it might break market structure. So what I would do is I would pull my fib from here to here. I know this is the area I want to look for, and this is the 1-hour order block, the bearish order block, and I'll have that here. And I would basically wait for price to trade up into this area. And also what I would do, I would start from the bottom of this bullish candle, and I would draw a fib from there, because this is most likely going to be another order block, this bearish candle right here, if this is going to be an up move. So now you wait for price to trade into here, but it already did. You would try to get an entry depending on time of day, and let's just see what happens. Let's see if it trades up into these areas and what happens. Okay, price came back into 62%. Okay, it's starting to get close. It's rejecting the 70.5, 79. Right, I would probably gotten an entry. What time is it? 9? Yeah, I most likely would have got an entry due to 9:30. I would have gotten into sells around here. This is just all hindsight. Stops would be above the order block and above the order block's high. So the order block's high, if you look to the left, it's at 31,423. So I'll have my stop at 31.24, a pip above, and let's see what will happen. Price came down and would have hit TP1. You would have been broke even. comes close and it would have stopped you out. But if you were break even, you most likely would have took some profits. And that's just how I do it. I'm an intraday trader, so I don't tend to hold trades for a long time. I like to be in and out. I like to get my money within like 2 hours, 3 hours, and then I'm done trading for the day. Here, I'm gonna look for an example of an order block on Bitcoin, because these work for any pair, not just one. So if you look up here, this is a 4-hour order block right up here. See, price was in an uptrend and then started breaking lows right here. So the market structure was broken. So now you wait for it to trade into this order block. You would have pulled a fib from these to the lows. The fib matches up with the order block. You wait for entries. You could have profited a good amount depending on if you got in these areas. Right here was a minus 4% drop. If you would have got in again up here, it was even bigger drop, minus 7%. You could easily make money, and you don't need to have a crazy strategy. You just got to have a strategy that you have rules to. And if you have rules, that means you're not going to get into any unnecessary trades, if you get what I'm saying. And if you see up here, this is a 4-hour order block still being respected. And if I have a daily order block also in there, that looks like it's most likely going to get respected too. The daily order block is right here, breaking lows, broke the lows. And now I would for it to trade up into here, the daily order block and the fib, to then possibly come lower. But that's really it. If you, like I said, if you want more experience and more like in-depth knowledge on order blocks, I suggest you go to ICT. He's a better teacher at it, and he's the one who created this. So that's all for today. I'm gonna see you guys in the next video, and everyone take it easy.